What if I told you the money in your pocket, the dollars in your bank account, could be on the verge of a massive shakeup? This isn't some far-fetched movie plot. This is a real conversation happening in the highest circles of finance right now. Stick with me, because what we're about to uncover could change your financial future. Hey everyone, welcome back to the channel. Today, we're diving headfirst into one of the most talked about, and frankly, scariest topics in finance, the potential collapse of the US dollar. And more importantly, we're going to explore if crypto could be the lifeboat you need by the year 2026. First things first, let's get real. Is the US dollar really going to collapse overnight like a house of cards? Probably not. A full-blown, apocalyptic collapse is extremely unlikely. The dollar is the world's reserve currency. Global trade, oil, nearly everything is priced in dollars. Untangling that web is a monumental task, but collapse doesn't have to mean zero value. It can mean a rapid, painful loss of purchasing power. It can mean losing its status as the world's go-to currency. And the warning signs, they're flashing brighter than ever. Let's look at the evidence. The US national debt is skyrocketing into the tens of trillions. To pay for everything, the government has been printing money at an unprecedented rate, especially over the last few years. Basic economics tells us that when you increase the supply of something, its value tends to go down. This is inflation, and you're feeling it every time you go to the grocery store or fill up your car. Your dollar just doesn't go as far as it used to. Then there's the global scene. Countries like China and Russia are actively trying to move away from the dollar. They're forming new economic alliances, like the BRICS nations, and exploring trade in their own currencies. This process is called de-dollarization. Every time a major oil deal or trade agreement happens outside the dollar system, it chips away at the dollar's dominance. It's like a slow leak in a tire. For a long time, you don't notice it, and then suddenly, you're on the rim. So, if the foundation is shaking, where do you go for safety? For decades, the answer was gold. Gold is the original safe haven asset. It's held its value for thousands of years, but we're in the 21st century. And there's a new kid on the block, a digital gold, Bitcoin, and the broader crypto market. Let's shift gears and talk about why crypto, specifically looking ahead to 2026, is becoming such a compelling hedge against currency devaluation. Unlike the US dollar, which the Federal Reserve can print into infinity, assets like Bitcoin have a fixed, finite supply. There will only ever be 21 million Bitcoin, period. This program scarcity is its most powerful feature. You can't just print more Bitcoin to solve a problem. This makes it fundamentally different from fiat currencies and, in theory, a powerful store of value. Think about it this way. If the value of your dollars is going down because more and more are being created, you want to own assets that are becoming scarcer, not more plentiful. That's the core argument for Bitcoin as digital gold. Now, let's get to the 2026 timeline. Why is that year so significant? A few key things are converging. First, the next Bitcoin halving is expected around April 2024. The halving is an event that cuts the reward for mining new Bitcoin in half. This reduces the rate at which new Bitcoins are created, making it even scarcer. Historically, the 12 to 18 months following a halving have seen massive bull runs in the crypto market. That puts us squarely in the 2025 to 2026 timeframe for a potential price explosion. Second, by 2026, we expect to see much clearer regulatory frameworks for crypto in the US and around the world. Major institutions are already jumping in. We've got Bitcoin ETFs, and big banks are building out crypto services. This isn't the Wild West anymore. By 2026, institutional adoption could be in full swing, bringing trillions of dollars of new capital into the market. More regulation and more institutional money mean more stability and legitimacy, making it a more viable hedge for everyday people, not just tech pioneers. So, you have a currency that is being devalued, coupled with a new asset class that has a fixed supply, increasing institutional adoption, and a built-in scarcity event that historically precedes major price increases. The timing is fascinating, isn't it? But let's be balanced. Crypto is not a magic pill. It is incredibly volatile. You've all seen the charts. The price can swing 20% or more in a single day. This is not for the faint of heart. If you can't handle that kind of volatility, then you need to be very, Very careful, the key here is not to bet the farm. The idea of a hedge is to diversify. It's about allocating a small portion of your portfolio, say 1% to 5%, to an asset that performs differently from your traditional stocks and bonds. If the dollar continues to weaken, that small crypto allocation could see outsized gains, protecting your overall wealth. If the dollar remains strong and crypto falters, your exposure is limited, and you haven't risked your entire financial security. Let's look at how this might play out. Imagine by 2026, inflation has continued to run hot, and the dollar has lost another 15 to 20% of its purchasing power against other global currencies and assets. Your savings are effectively shrinking. But if you had allocated just a small percentage to Bitcoin or Ethereum, and the post-halving bull run materializes, as it has in the past, that part of your portfolio could potentially double, triple, or even more. This growth could offset the losses you're experiencing from the dollar's decline. That's the power of an effective hedge, and it's not just Bitcoin. Look at Ethereum and the world of decentralized finance, or DeFi. DeFi is building an entire alternative financial system on the blockchain. You can lend, borrow, and earn interest on your assets, all without a traditional bank. As people lose trust in the traditional financial system, they may increasingly turn to these decentralized alternatives. This is another massive trend that could gain incredible momentum by 2026. So, what are the practical steps? First, education is everything. Don't just ape into a coin because someone on the internet told you to. Understand what you are buying. Learn about Bitcoin's scarcity. Understand Ethereum's utility. Research different projects. Second, consider dollar cost averaging. This means investing a fixed amount of money at regular intervals, regardless of the price. This strategy helps smooth out the volatility. Instead of trying to time the market, which is nearly impossible, you buy consistently over time. Third, think about security. If you do decide to invest, learn how to store your crypto safely. Not your keys, not your coins is a famous saying in the crypto world for a reason. Using a hardware wallet gives you full control over your assets, protecting them from exchange hacks or failures. Let's recap the perfect storm brewing for 2026. On one hand, you have a legacy currency, the US dollar, under immense pressure from unprecedented debt, money printing, and a shifting global power dynamic. Its purchasing power is eroding right before our eyes. On the other hand, you have a new, digital asset class led by Bitcoin, defined by mathematical scarcity. Its adoption by major financial institutions is accelerating, and its own internal economic cycle, the halving, is set to create a supply shock that has historically led to massive price appreciation, with the peak effects likely to be felt right around 2025 and 2026. The writing is on the wall. The world is changing, and the nature of money is changing with it. Ignoring this shift is a risk in itself. While the idea of the dollar collapsing is scary, it also presents an incredible opportunity for those who are prepared. Crypto isn't just some speculative gamble anymore. It's emerging as a serious contender for a role in a well-diversified 21st century portfolio. It's a potential hedge against the very real and present danger of currency devaluation. The next couple of years are going to be absolutely critical. The decisions you make now could have a profound impact on your financial well-being by 2026 and beyond. Don't let fear paralyze you. Let it motivate you to learn, to prepare, and to position yourself for the future of finance. This is a massive topic, and we've only scratched the surface. What are your thoughts? Do you think the dollar is in trouble? Are you using crypto as a hedge? Let me know in the comments below. I read every single one. Thanks for watching. If you got any value from this video, do me a huge favor and smash that like button and subscribe for more content that will help you navigate this crazy financial world. We'll see you in the next one.